The shadows lengthen over Scandinavia, a barren, beautiful land, rich in timber and resolve, but desperately poor in liquid assets. This is the ordinary world, a world of scarcity. In the late 8th century, the traditional paths to wealth were blocked. Land was divided, status was rigid. Ambition needed a new market, a new risk-opportunity matrix. The Viking Age was not merely a cultural explosion, it was an economic revolution driven by high-stakes venture capital. They weren't just pirates, they were early modern investment syndicates. Every raid, every longship voyage was a meticulously calculated investment proposal designed to achieve maximum return on human and material capital. The call to adventure was the rumor of untapped wealth, rich, soft targets, insulated by geography and peace, monasteries, glittering like untouched bank vaults, ripe for disruption. But first, the technology, the core product, the Longship. This was the seed funding, the crucial innovation that unlocked the entire enterprise. These ships were fast, flexible, and utterly scalable. They could cross open ocean, then pivot instantly to riverine assault, penetrating deep into enemy territory like a precision strike missile. Building a single ship required enormous resources: timber, iron, sailcloth. This capital was often pooled by multiple investors, splitting the initial risk. The Jarl acted as the venture capitalist, the CEO, and fund manager. He supplied the vision, the navigation, and the leadership necessary to turn human capital into tangible wealth. The crew? They were the workforce, taking equity in the outcome, sharing the risk and the eventual plunder, according to their status and contribution. The refusal of the call was not an option. Scarcity drove them. The only alternative to risk was famine or stagnation. They crossed the threshold into the unknown waters. 793 AD, Lindisfarne, the moment the investment thesis was proven. A soft market, ripe for entry. High reward, minimal defensive expenditure. The ROI from this single event was staggering. Gold, silver, slaves, instant liquidity, validating the high-risk model in one violent stroke. But success brings competitors. The trials began as defenses hardened. The Vikings quickly realized they had to scale their operations, moving beyond simple smash and grabs. They learned to create forward operating bases, establishing strategic winter camps, effectively early decentralized branch offices in foreign lands. This required new alliances, sometimes with local disgruntled rulers, other times with other Viking groups, forming powerful temporary joint ventures. The enemy? The established, slow-moving feudal systems of Europe. Their structural rigidity was the Vikings' competitive advantage. Speed versus bureaucracy. The greatest trial was geographical expansion. The rivers became highways of opportunity. The Rhine, the Seine, the Volga. New markets demanded new strategies. They diversified. The primary model of plunder evolved into tribute extraction. Why take the assets once when you can monetize the threat annually? Danegeld, literally Dane's gold, was protection money, the ultimate tax on systemic fragility. It was a massive, reliable revenue stream, guaranteed by violence. This pivot demonstrates sophisticated financial thinking. They transitioned from growth to profitability by monetizing their terror brand equity. Simultaneously, others moved east. The Rus Vikings opened up the Eastern European trade routes, transforming the raiding model into pure aggressive commerce. The middle trial, the Siege of Paris, 885 AD. A massive, coordinated effort involving hundreds of ships. This wasn't a raid, it was a hostile takeover attempt. The investment was substantial, the human cost high, but the potential payoff, control of a major European hub, justified the expenditure. This era demanded a new level of organization. The smaller syndicates merged into superfleets, requiring professional management and standardized logistics. The stakes kept rising. The risks were met with proportional rewards. A long, successful campaign could turn a peasant into a chieftain. But the ordeal was yet to come, the great heathen army. This wasn't a fleet, It was an invading force, an industrialized machine designed for sustained conquest. Led by figures like Ivar the Boneless and Halfdan Ragnarsson, this collective represented the culmination of decades of strategic learning. Their investment was immense, thousands of warriors, hundreds of ships, and years away from home. The expected ROI was nothing less than sovereign control. The struggle against Alfred the Great of Wessex became the definitive stress test. Alfred was the first enemy CEO to truly understand and counteract the Viking disruption model. Alfred countered their speed with permanent fortifications, burhs, and implemented rotating military service, starving the Viking strategy of quick profit opportunities. Eventually, even the great heathen army realized that perpetual raiding was unsustainable. They needed an exit strategy. The ultimate reward was not just the treasure, it was the land itself, the Danelaw. They stopped extracting rent and started owning the real estate. This shift marked the transformation of capital from portable wealth, silver, gold, into fixed assets, farmland, towns. The venture had matured. The Viking settlements introduced profound changes. Their system of governance and law, based on assemblies and pragmatic agreements, was far more decentralized and equitable than the feudal system. They effectively merged their entrepreneurial spirit with administrative capability. They were managing their successful acquisition. The journey wasn't over. The road back saw them consolidating power, ultimately leading to the formation of powerful kingdoms like Canute the Great's North Sea Empire. This final phase was the resurrection. The former raiders became legitimate sovereign rulers, transforming the reputation of their brand from destructive force to founding dynasty. The analogy holds. Vikings were early risk capitalists. They pioneered the scalable deployment of specialized technology, the ship, to exploit market inefficiencies, defenseless monasteries. They understood the principle of burning the boats, total commitment to the enterprise, minimizing the option for easy retreat, maximizing aggressive execution. Their greatest risk was survival. Their reward was the genetic and cultural blueprint of modern Europe. The capital they moved jump-started economies. The Longship was their internet, connecting disparate markets. The raid was their IPO, raising immediate, staggering amounts of capital. And the ultimate victory was assimilation, the absorption of the disruptive force into the established market, transforming it from the inside out. From the desperate search for silver to the foundation of empires, the Viking Age shows us that the mechanics of wealth creation haven't changed much in 1,000 years. It's all about identifying undervalued assets, maximizing risk tolerance, and achieving rapid, scalable growth. Sometimes the most brutal efficiency wins. They were the ultimate disruptors, the original venture capitalists operating with sharpened steel instead of spreadsheets. The spirit of the Viking enterprise lives on, reminding us that every fortune starts with a vessel, a plan, and the courage to cross the threshold. If this deep dive into historical economics and brutal ambition intrigued you, we have dozens more stories waiting to be unearthed. Support historical research and cinematic storytelling. Don't forget to like and subscribe for more updates on history, finance, and the relentless march of human innovation.